Hello, I'm David Cassidy with the weekly market summary for the week ending Friday, the 2nd of April. Global equity markets brushed aside Europe's new lockdown restrictions and instead focused on the faster vaccine rollout in the US and the subsequent economic reopening, which bodes well for global economic growth and global equity markets. This economic recovery was clearly evident in Thursday's US Institute for Supply Management ISM data, and this helped the S&P 500 index close above 4,000 for the first time. Now, the S&P 500, of course, tracks the 500 large US companies, and so it offers a better picture of the state of the US economy than its more famous cousin, the Dow Jones Index, which has just 30 constituent companies. Additionally, the Dow Jones is calculated on a price-weighted basis, which means that the index performance is skewed heavily towards those companies with a high absolute share price, irrespective of the market capitalization. And as a result, for example, United Health Group, with a share price of $367, has the largest weight at 7.3% in the index, while Apple's weight is only 2.44%, making it the 22nd largest weight in the Dow Jones Index, as its share price is only $123, despite the fact that the market capitalization of Apple is 6 times more than United Health at just over $2 trillion versus just $347 billion. By way of comparison, the S&P 500 uses market capitalization, just like the FTSE 100 index, and so larger companies constitute a larger percentage of the index, irrespective of their absolute share price. And as Apple is the largest company in the US, and in fact the world, its weighting in the S&P 500 is 5.70%, whereas United Health is the 12th largest and has a weight of just 1.02%. Going back to the week's data, the ISM manufacturing reading jumped from 60.8 in February to 64.7 in March, its highest reading since Ronald Reagan oversaw the economic recovery from the recession back in the early 1980s, while the employment reading rose from 54.4 to 59.6, and as 50 is a line separating expansion and contraction, not only do these readings show that the US economy continues to recover, but more importantly, the recovery is accelerating. Adding to the list of reasons to be optimistic about post-coronavirus economic outlook, President Biden announced plans to invest over $2 trillion on US infrastructure. Although it is important to remember that infrastructure work can't all of a sudden be turned on at the flick of a switch, so its impact, whilst undoubtedly positive, is unlikely to be seen for several years to come. Looking ahead, this coming week, we can expect further rises in global equities, thanks to Friday's US employment data, as most equity markets were closed and therefore unable to react to the stunning data release, which showed that non-farm payrolls rose by 916,000 in March, while February employment rise was revised up by 89,000 to 468,000 of a gain. Our main attention this week will be focused on the minutes from the last Fed monetary policy meeting held back on the 17th of March, given the current inflation debate. Data-wise, from the US this week we have ISM services, weekly jobless claims and factory orders. Elsewhere we have Eurozone unemployment, Chinese PMI and Chinese CPI inflation.